Hello, welcome to this carrier update brought to you by PowerFleet. I'm here with Tony Mulvey, who had, I think, a pretty busy day yesterday. Tony, thanks for joining us this morning. What do we have here?
Thanks, Anthony. We've got our outbound tender volume index. So we've talked about it for the past couple weeks, right? We've seen that decline in volumes. There's kind of, I don't want to call it a highlight, but the first thing to note is we've seen it kind of plateau over the past couple days. We've been right around this 13,570 level. So up and down just a little. I think yesterday today's data point, we're down like 0.04%. When you're talking about at 13,000, it's not really a big move. So kind of seeing a flat line, not going to call it a trend or anything like that, but it is something worth noting that we're not seeing that rapid decline anymore. I mean, ultimately, we're still down week over week, I think about 2.5%, right around that level. So definitely still down from way where we were just a month or two ago. And I mean, where are we headed? It's kind of hard to say. I mean, you look at import levels, they're still, I mean, they're up like 13, 14%. I looked back at the quarter on average, and they were up about 16% throughout the entire first quarter so far. So, I mean, there's still a lot of freight coming in. Granted, intermodal traffic is, especially domestic intermodals, really started to shine. And inventory levels are high. And I mean, when you think about inventory levels being at the levels that they are, right? I mean, they're through the roof. I mean, the freight has to go somewhere, right? I mean, you think about space, especially in Southern California. You know, Prologis's fourth quarter earnings, they've released that data. In Southern California, occupied space is like 99.6%. So I mean, like, there's really nowhere for anything coming through those ports to go. So it's got to go to other markets, which is, I mean, it's a good thing for truck. I mean, when you think about it, that freight's going somewhere.
Right.
And a lot of those markets like a Phoenix or a Stockton or markets like that, they're going to be a beneficiary because it doesn't make sense to put it on the rail. And so there is still going to be some outbound freight, even though we're seeing this decline in volumes. Because, I mean, if you look back, the orange line is our 2020 volumes. And what you see is that was when the pandemic first hit and where there was that surge in freight volumes. We're still above that. So, I mean, there's still a lot of freight moving through the network. We'll move here to our next chart, and it's going to be kind of a different story. So it's our outbound tender reject index down to 15.26%. So that acceleration's kind of, or that decline's accelerating, right? Yeah. So volumes are kind of stabilizing. I don't want to say, again, that's going to be a trend moving forward, but it is something worth noting where we had been just on this big decline that now any like stabilization we saw was around a weekend, and this is happening in the middle of the week.
Right.
So I think that's a little interesting and worth noting, but this decline in rejections, I mean, it's hard to, like, it's a little worrisome for rates is what I would say. But I mean, even with that, rates are still elevated. Contract rates are really high. I mean, they're at all-time highs, which is helping drive this big decline that we've seen over the course of the past year. So I think over the next 3-6 months will be really telling based on what the consumer does, what import demand, because ultimately that stuff ends up in truckload. So it takes a little time for once it clears the port to hit the truckload market. But I mean, like I said, we've been running up about 16% year over year. In 2021, we're seeing record numbers from the port. So I mean, if we're exceeding that, it just means that there's more stuff coming in than ever before.
Yeah, Tony, it definitely seems like we're looking for where that new baseline is going to be. I think we all expected some slower growth, but finding out where that actual slower growth baseline is going to be throughout 22, I think is going to definitely be the interesting takeaway here. As we see, these rejections continue to come down, I think one of the things you mentioned earlier this week is that, and today, that contract rates are still very much elevated. Does it seem like a trend that's going to really persist throughout the remainder of the year?
See, that's where I don't know. Because, okay. I mean, I think you'll see with this volatility, and you have to think about how contract rates have been. The contract rates that are coming in were bid 2, 3, 4 months ago, and they're just now coming online, right? So the market's changing now, but these rates were agreed upon months ago. So it's like, are we going to see these shorter bid cycles which I think we probably will.
Yeah.
Or I mean, just avoiding contract and going into spot where it may be cheaper ultimately. I mean, that's where contract rates have gotten to, where that spot rate isn't as, that gap between the two is pretty narrow, especially when you factor in that those spot rates include fuel surcharges and contract rates don't. So,
yeah, it's almost as if we're in a just in case for capacity at this point right now with all the contract rates that have gotten locked in. Tony, thank you so much for this update. We'll check in with you again right now. We're going to toss it back over to Kaylee Nix.